traders, welcome back to another episode of S Trades. In this episode, we are going to talk about demand and supply, beginners friendly or beginner guide. We are going to look at the introduction of demand and supply. We are going to look at what is a demand, what is a supply, and what are the most mistakes beginner normally do in trading demand and supply. Now, before we jump into this video, make sure you like, you subscribe, and you share. Okay, the theory part of demand and supply is simply because demand and supply is one of the most important concepts in forex trading. It helps traders understand where big players and when big buyers and sellers enter the market. Demand is equals to buyers, supply is equals to sellers. When buyers are stronger than sellers, price move up. When sellers are stronger than buyers, price move down. Understanding these zones helps traders find high probability entry points. Okay, jumping to the point number one or topic number one. It is a demand. What is a demand zone? A demand zone is an area where strong buying happened previously. When price returned to this area, buyers may step in again and push the price towards the upside. Characteristics of a strong demand zone: strong bullish candle leaving the zone, fast price movement upward, little time spent at the zone, often creates reversal or trend continuation. Example: price falls in on demand, buyers enters, price rises. What is a supply zone? That is topic number 2. Supply zone is an area where strong selling happened previously. When price returned there, sellers may become active again and push price downward. Characteristics of a strong supply zone: strong bearish candle leaving the zone, aggressive downward movement, quick rejection from the area, often causes a bearish reversal. Example: prices rise into the supply, sellers enter, price drops. How to draw demand and supply zones. Step 1. Find strong price movement. Look for explosive bullish or bearish candle. Step 2. Locate the base. Find the small consolidation candle before the strong move. Step 3. Draw the zone. Use a rectangle tool to mark the area. Extend the zone to the right side of the chart. Types of a demand: we have supply pattern or rally base rally into bracket demand. Price rallies upward, pauses, then continues upward. Drop base drop supply. Price drops, pauses, then continues downward. Drop base rally bullish reversal pattern. Rally base drop, a bearish reversal pattern. Entry confirmation: never enter blindly at the zone. Wait for confirmation such as bullish or bearish engulfing candle, breakout structures, rejection candle, trend alignment, liquidity sweep, low time frame confirmation. Risk management: traders are encouraged to risk not more than they can afford to lose. For example, risking 1 or 2% of your account. The trader's psychology may be at ease depending on their account size. Risk smaller amounts per trade. Use stop loss. Avoid over trading. Follow your trading plan. Protect your capital. That is the most crucial aspect of trading. Common beginner mistake: marking too many zones, trading weak zone, ignoring market trend, entering without confirmation, using large lot size. Emotional trading: simple trading example: buy setup, market is bullish, price return to the demand, bullish confirmation appears, enter buy, stop loss below demand zone. Sell setup, market is bearish, price return to the supply, bearish confirmation appears, enter sell, stop loss above supply zone. Pro tip for beginners: price zones are stronger, higher time frame zones are more reliable. Combined with market structure, practice on demo account first, focus on quality setup. Conclusion before we jump into the live analysis. Hey traders, as you can see on the sketch chart, Here is a clean example of demand and supply. Let's say the market was trading from the downside and then breaking structures to the upside. As you can see, let's assume this is our price. We had a strong impulse move to the upside, then we corrected, then we broke the structure, and we broke and we went aggressively to the upside. Now, as you can see, always price leave behind areas of imbalances. These imbalances can be either demand zone, where we had a strong increase in the buy pressure, and then eventually price will come to balance the price towards the demand area. Now, these are just examples on the sketch chart of the demand and supply. As you can see, we break the structure, we came to rebalance to the demand, break the structure again, we induced the price, then we broke structure again, then we came and rebalanced to the demand area. Now, as you can see, several breaks of structures to the upside. This indication indicates that we are only looking for buys or the trend is bullish. We're gonna be diving deep to look forward how to identify trend and the buyers. As you can see, the price mitigates the supply, then came back to the demand, mitigate the supply again, came back and took out the demand, and so on and so on. As a beginner trader, you must understand that the market structure is a core foundation of the price. Without the market structure, we have no direction. Without the market structure, we have no demand and supply. Now, as you can see on this sketch area or the sketch chart around this point, we can also agree that prices always respect the area where it came from. Prices always respect the area where it came from. For example, if you look at this previous demand here, this demand was a freshly unmedicated demand. Therefore, the price came along and rebalanced the price towards the demand and then continue pushing to the upside. This is a bullish trend. A bullish trend is whereby you have a strong buying pressure causing the price to move to the upside. And a bearish trend is where the price is decreasing in trend. For example, the price is trading. Here is the live example of a well-labeled chart that with indication of demand and supply. As you can see, we had several breakout structures to the upside, the price mitigating the supply, reversing towards the demand, and mitigating the demand and pushing higher. Now, just a quick explanation on this before we jump to the live market analysis. As you can see, the price was trading bullish from the area of origin. This is the area of origin. Then it came, broke the structure, leaving behind the demand zone, then break the structure again, leaving towards the demand zone, as you can, leaving behind the demand zone and pushing higher towards the supply. Here is a quick example. As you can see, these are well labeled demand and supply. Now let's look at the live example on the live chart. As you can see, traders, here on Euro versus United States dollar chart, we are going to cleanly identifying the demand and supply with the market structure. As you can see, the price originated from this point here, consolidated a bit. This is the sideways price action, then the price initiated towards the upside, but eventually price is rejecting the price is rejecting to move towards the upside, and therefore it has created a well supply here. A supply is simply an area of decreasing in price action. As you can see, we label our optimal demand or our high probability demand. We will leave this demand because it's already priced as we violated it, and then we have this fresh demand around here. Now we are going to use market structure to identify our high probability demand. Now as you can see, we are going to draw our line here as our breakout structure, or let's just draw from here to here as our breakout structure, and we have the demand that caused the breakout structures the upside. Now we mark our demand here. This is our demand zone from this point around this point. As you can see, we have our demand zone, and most probably we are going to look at the supply zone. Now the supply zone is simply the area of decreasing in price action. Now we are going to mark our supply at around this point here, at around this point, from area of decreasing in price action to this point here. Now simple, this is our demand and supply. You can also use the aggressive method to enter this trade, but since it is a beginner guide, let me use the conservative approach. Now as you can see, traders, the price is already coming to collect or to rebalance to the demand zone. This is our newly formed demand zone that initiated the price to the upside. Now this is a newly formed demand area where I'm expecting price to reach and test this area and moving towards the supply. Now I will move back. Let's play the price a bit. As you can see, the price has already reached our demand area, and therefore we go to the lower time frame, such as 5-minute time frame, to look for our entry. Now as you can see on the lower time frame, we have our well labeled demand, and the prices are currently approaching our demand zone. Now let's wait and see if we will have a confirmation on this to enter the trade. As you can see, traders, the price has already created another change of character or a break of structure. As you can see, traders, already price has broke this internal structure, and currently we are expecting continuation of bullish momentum, and therefore we are going to long this position, or we are going to execute buys on this euro versus United States dollar. Now we come and take our long tool, and we place at the area at which the price blocked the structure. This is a conservative way, and we want to let the price run towards the area. Want to let the price run towards the area of demand, of supply, I mean. Now our TP is around that point, and our stop loss is just below this area. Let's say this area here. Our entry is at that point, and our take profit is around that point. Our entry at that point. Now let's see how the price will go. Let's go back to the 30-minute time frame to observe the bigger chart. Now this is our target, and let's spread the price. As you can see, traders, the take profit is already hit level. Let's look at the sale part of this structure. As you can see, traders, the price is already on our 30-minute time frame supply zone, and therefore we need to look at the breakout structures that is enhancing that the trend is most likely to reverse. Now let's look if we have another breakout structure to validate the supply zone. As you can see, we already have another breakout structure that has validated the supply zone, and therefore we are going to short this position. We are going to look for sell entries on this euro versus United States dollar. Now go to our tool, where our tools are, and then we look for our short tool. Now we enter at the close of this candle around this point here. Our stop loss just a couple of pips above the highs. Then our take profit we will take the 30-minute time frame demand area. Now here is our take profit, traders. Let's mark our take profit. We are targeting this area here. Now let's see how the price, okay, sorry. Now that is our target profit area. Now let's see how the price will react. As you can see, already tip already hit. Thank you for watching, guys. Let's meet on the next video.